Hey guys, welcome back to the channel. My name's Liam, and in this video I'm going to share with you two potential entry models. One is the sell model and the buy model involving liquidity sweeps. So let's just break these down on exactly what they are, because they may sound quite complicated, but in reality they are actually very, very simple. So the liquidity sweep sell model, what we want to see, so this is just this model to the left here, on the left side of the screen. We want to see price run the liquidity above a significant high. So for example, this red circle right here, this is a significant high in the market. We see price trade above here and deviate above this significant high right here. So this is a run of liquidity. I've identified that as the gray shaded area right here, showing a range deviation or a run of liquidity. So we want to see price run the liquidity above a significant high. Then we want to see a reclaim of price below the significant high. So this is our confirmation because, at this stage, when price is right here, we don't know whether this is a breakout, whether this is a run of liquidity. We have no idea at this current stage. Therefore, we need to wait for essentially the market to show us their hand, okay? And that's done in the form of a reclaim of price below the significant high. So that's this level, this structure right here. Once we see the deviation, we want to see the reclaim back below this significant level right here. And therefore, this is an indication or a confirmation that we may look to trade back to the downside. Because if you think about this logically, this is just a range, okay? This is the range high. This is the range high right here. This is just a deviation above that range high, and therefore we can look to enter off this level and look at trading that back to the bottom of the range. Okay, so we need to see an entry on the retest of this significant level. Okay, so around this area will offer a entry for our sell model. We will have invalidation above the deviation, and then we can look to target range lows back at the bottom right here. Okay, so to put it simply, all we want to see is price come above a significant high. Then we want to see price reclaim this level, the range high, and then we can look to enter our sell model off this level around that area, and then we can look to target range lows with invalidation above the deviation. Okay, so that's the sell model. You can see here this red line. This indicates the sell trade where we are going to be looking at taking part. Okay, so all of this is just the entry schematic. Okay, however, this red line right here is where we are going to be entering our sell trade, and this is the range that we are going to be taking advantage of. Okay, so only the red line right here indicates the sell trade that we'll look at taking a part of. Okay, so now let's look at the buy model, where we want to see price run the liquidity resting below a significant low. So for example, this is the significant low right here. We want to see price trade below the significant low. This is a deviation or a run of liquidity. Then we want to see a reclaim of price back above the significant low. So that's this right here. We trade back above and we're holding above, and then we can look at entries on the retest around the significant level, okay? And then we're going to look to target range highs. So this is our entry around here, target range highs, and we have invalidation below the deviation. And this green line right here, this indicates the buy trade that we're going to be looking at taking part in. This is the impulsive leg that we're looking at catching to the upside. As always, the gray box right here indicates the run of liquidity or the range deviation, which we have just witnessed in front of ourselves. So this gray box right here shows a range deviation. So this is the range that we're trading in. However, this is just a small deviation below the bottom of the range, which provides the liquidity in order to move the markets to the upside. Okay, so this is the liquidity sweep buy model that we're going to be looking at executing. So now let's look at some real trade examples so we can put this model or these models into real practice. Okay, so one of the most common questions that I actually get asked is how can we identify the actual key levels or the areas of liquidity that we are looking at trading from? Because if you can't identify your levels objectively, then in reality, you're just trading a very subjective strategy when what you actually need is a very objective approach in order to identify the areas of liquidity. So the best way to do that is if you head over to the indicators tab at the top of your screen, and there's a fractals indicator by Rachel_T. Add that to your chart, add that to your favorites, and then when you're on the daily time frame, that's going to give us a very objective approach in identifying the key swing levels. Okay, so for example, right here, we have our most recent swing high. So let's just mark that on for you guys right here. So we're looking for a run of liquidity resting above this swing high, okay? And let's just play price on. So you can see right here, this is the daily time frame. So these key pivot levels are very, very significant, okay? What you can see on the daily is it appears that price is deviated above this key daily high, and then we've actually came back down and closed below this level on the daily time frame. Therefore, this is our confirmation that we're looking for. So let's just sort of rewind things back just to make this as simple as possible. So we have a high, we deviate above that range high, then we reclaim back below the range high. Then we can look to short off this level and then target range lows. Okay, we've got invalidation above the deviation, and then we can look to target the range lows. So this is essentially what's taking place on the daily time frame, but I'm going to zoom in a little bit here on the 4 hour so you can see this schematic actually playing out. So we can understand what's actually going on here even just by looking at the daily time frame. However, when you do drop down to the 4 hour, things may be a little bit more clearer. Okay, so this is the range that we're dealing in right here. What you can see is we've run this liquidity to the upside, which was resting above this daily swing fractal level. Okay, we've deviated above, then we've reclaimed on the daily, closing back below. Therefore, we can look for an entry around our key level, invalidation above the deviation, and then we can look to target range lows. You can see this trade actually offers around a 1 to 3.4 risk to reward, which is very, very lucrative, and it means that your win rate doesn't actually have to be too high in order to generate, profits over time with this strategy. So you can see what we have here is a deviation. Let me mark that on with the gray box just so this is as simple as possible. So this is the gray area here. This is our deviation above the range highs. And then the trade that we are looking at taking part in is this one right here. So we've seen the deviation. This is essentially the range that we're dealing in right here. We've seen the deviation above the range highs. We've reclaimed this level. Therefore, we can look for an entry off the range highs and then look to target range lows. Okay, so let's see if we are triggered in this trade. You can see we're triggered in here, and let's play this trade on. So you can see the liquidity was taken from this range low, which is resting right here. So you target the liquidity. You may look to trail stops. You may look to target liquidity. That's really up to your own trading preference. However, in this video, we're teaching the basic concepts, which is this is the range that we're dealing in. This is the deviation right here. This is the reclaim of this level right here. And then our entry is around this key level. And then we can look to target opposing liquidity, which is the bottom of the range, Okay, so we're taking it from range high to range low. Okay, so this is the sell model. Okay, now let's look at the buy model. Okay, so that was the sell model. Let's just get rid of that. And let's pop back over to the daily so we can objectively identify our sweep of liquidity. So in terms of the daily, what you can see is we have this fractal low right here. We swept that liquidity, and now price has started to reclaim because we've closed back above this key level. Okay, so we can see that just by looking at the daily perspective. However, when we drop down to the 4 hour, what you can see right here is this was the key level that was deviated right here. So let's just mark on the deviation. So this is the deviation right here, below that key level. We've reclaimed on the daily. Therefore, we can look for an entry off our key level, and then we can look to target range highs, which is resting back above here. Okay, so this is the range that we're dealing in. This is the range high right here. So this is the range high, and this is the range low. Okay, we've deviated the range low right here, and we've reclaimed back above, confirming on the daily time frame that momentum is shifting back to the upside. Because at this stage right here, we don't know whether this is going to be a breakout or whether this is going to be a liquidity sweep. However, once we see this confirmation of the close back above, then we can look to bid off this level with targets back up at the range highs and clear invalidation back below the deviation. Because if you think about this logically, if we start closing back below the deviation, then it's more likely that this trend, will be breaking out to the downside. Okay, so let's see if we are triggered in this trade. You can see we are right here. Stop loss is intact at the moment. We're triggered in right there, and then we're looking at targeting range highs. So you can see range highs were hit here for a 1 to 3.7 risk to reward on this trade. And this is the buy model, the liquidity sweep buy model, where we're dealing in a range. We've got a liquidity sweep of a significant daily level. We reclaim, then we can look to bid that back up to the range highs. Okay, so this is just the schematic that we're dealing in right here. We've got the deviation, which is, of course, this gray box right here, deviation right here, reclaim right here, reclaim right here, entries on the retest of that level, entries on the retest of that level, and then target, we've got range highs right here. This is your range high, and this is your range high right here. Okay, so this is the liquidity sweep buy model, and this one is also a great example. So you can see in theory, we took it from range highs. We took these shorts right here, back down to the downside, and then there was also a buy option as well. Okay, so let's just pop back over to the daily just so we can summarize, exactly what we've been covering in this video. So let's see if we can get this in line. Okay, so these are the two models right here that we've been dealing with, and these are what have played out within this video. Okay, make sure you guys do join the Discord below. The link is in the description of the video for more analysis and free trade ideas like the ones shared in this video. All right, like, comment, and subscribe, guys, and I will see you in the next video. Take care. Bye-bye.